That's one data point that we have with the ETH ETF that the Bitcoin ETF did not have is the Bitcoin ETF.
Yeah.
So maybe we could really double down on that conversation. Like the Bitcoin ETF, I think we were all surprised with the demand. And now we're kind of extrapolating that to the ETH ETF. Maybe that gets balanced out by the fact that the ETH price is higher now because of the success of the Bitcoin ETF. So maybe those things cancel out. But just really, maybe Alex, we could just double down one more time. Like what did we learn from the Bitcoin ETF that informs the ETH ETF?
Yeah, well, we see the total net flows, right? Actually, we see inflows. Let's just start there. You see inflows into all the newly launched vehicles, right? And then, of course, that's weighted against the outflows from the Grayscale Bitcoin Investment Trust. And we expect, there's obviously the Ethereum version of that ETH. I don't know what it's like, Ethereum, Grayscale, Ethereum Trust, probably. People expect outflows from there too, but I would also say part of the reason for outflows, in addition to people having played that trade of trying to collapse the discount to NAV on GBDC is also because the fee's really high. They're still charging 1.5%, 150 bips on GBDC, when all of the other issuers were in the high teens to like mid 20 range, and also waived them. Almost all of them, I think, waived the fees for like the first 6 months or to some threshold or something like that. So much cheaper vehicles launched. That caused a lot to come out of GBDC. So obviously we say, ETH is a similarly structured product. It had a pretty large discount that collapsed leading in to what we expect as a conversion. So we expect there's outflows there from people just closing that trade that they did, right? Where they short futures and they long the trust in order to collapse that discount to NAV and the trust. So outflows, we know there'll be outflows. So now that's why we're talking about net inflows, right? But now we start calculating them. We also have the whole first quarter. Those 13F filings to me were very telling. Like you had like the top 7 or something of the Bitcoin ETFs by AUM were not really heavily institutionally owned. I mean, sure, there's some big names. A couple of them are above 20% of the filings, right? You have to make these filings if you're an investment manager that has more than $100 million in assets. That $100 million RIA or wealth manager isn't that big, right? So like this would capture a lot of that, right? And only about 20-25% on the big ETFs had to file. That tells me that most of that those shares are held at Fidelity.com, E-Trade, TD Ameritrade, right? Like Schwab, the retail brokerage platforms. And well, I mean, look, hedge funds and institutions can also use those platforms, but if they themselves are reportable $100 million or more investment managers, doesn't matter where they have it, they would still report. So you're thinking like, I'm thinking it's a lot of people that like crypto already, like they liked Bitcoin. Similarly, I think there's at a minimum a proportionate amount of people, maybe market cap weighted, that like ETH, probably fewer than Bitcoin, but still a lot. And there are people with a lot of money in these accounts. You can pull data on like separately managed accounts or 401k balances. Think about and then also you start thinking about so I think a lot of the ownership is on those platforms in the hands of regular people, and that really surprised us, I think, that there was that much demand coming from there, because we can all buy Bitcoin for years. I've been buying Bitcoin I didn't need an ETF. Like people that want to buy Bitcoin, it's possible, right? But I don't know. You start to say, well, I did go in and buy some of the ETFs in my tax advantage account where I wasn't able to buy Bitcoin. So you just, to me, it's like one of the main learnings here was to caution against underestimating it, because I think we did underestimate the Bitcoin ETFs, even though plenty of people said they were going to be great. I mean, I also thought they'd be great, but not that fast, right? So that's sort of what underpins. I think that's probably the main learning I have from the Bitcoin ETFs.
Matt, how does this analysis vibe with you? Does that align with your thinking? Anything you want to add?
Yeah, I think that's right. I think it stretched our Overton window of what an ETF could do. I mean, before these ETFs, the most successful ETF of all time gathered $5 billion in its first year. And we're at, 15 in 6 months for the Bitcoin ETFs. So I think it recalibrated how successful this could be. I think what Alex mentioned is right. There was a lot of retail demand. I think a lot of retirement account demand. And let's be honest, crypto works really well in that setting. It's a long-term investment with potentially very high gains that can be protected from a tax perspective. That's 3 big boxes to check. And I think you saw significant flows into that space. So yeah, it taught us that this is a successful space. It expanded how successful it could be. And now it's also created a class of traditional investors who own crypto in a brokerage setting. And I think a lot of those people are going to add ETH on top of their Bitcoin ETF exposure.
Okay, I do want to get to the ETH flows metric. I know Alex kind of dropped the answer, but maybe if listeners weren't paying attention, I'm gonna ask that for that in a bit. But I'm gonna continue to drag this out because I have one side quest I want to get down. Are there any estimates about the next few months of the Bitcoin ETF flows, or are we now in the world of we'll just see it as it happens? Right now, we're in a bit of a lull. It kind of seems like the broader crypto market is priced to the flows, trying to see what the flows are doing next. And the flows haven't done a lot. We've had some small up days, some small down days, but overall, I think we've like established an equilibrium in the Bitcoin ETF flows. Do you guys have any takes for over the next like 2, 3, 6 months of the flows for the Bitcoin ETF? Any sort of do you guys have any estimates about that? Alex, start with you.
Yeah, I do. I don't have any hard numbers, but I would say what we're waiting for, I think it's fair to say we've reached a bit of an equilibrium. I mean, there's definitely been some independent registered investment advisors that have come in. So you have some financial advisors, right? But I think all the issuers, this is one of the weird things about the ETF, the ETH ETF timing. The issuers, I think Matt will know this as well, are all quite busy doing diligence with all the big wealth platforms right now to get their ETFs onto those platforms, right? Those are the flows that I was always talking about, that I know Matt and the team at Bitwise has always been targeting. Like, this is the giant like piece of the pie. You know, I think we think it's $40 trillion in either bank or broker dealer wealth management platforms, right? So we're talking about like Morgan Stanley is the one that's been in the news a lot. It's been reported many times by Bloomberg and others. So it's not that they've been actively looking to add these like quicker than most. I think they are the biggest. So, but they, as far as I know, it hasn't been reported that they have yet, right? So for Bitcoin flows, like from a outside of Catalyst for BTC USD spot Bitcoin, I would say we're waiting for more platform access. They haven't really arrived yet. That's the crazy thing about these. Like, this is, to me, it really is mostly a retail phenomenon. And so when to the extent that changes, right, to the dominoes fall for these giant platforms to start allowing their advisors to solicit and sell these things, and you start seeing model portfolios get constructed, and people start telling the story that Matt's talking about the long-term benefits, then I think that probably creates a whole new wave of demand. That's what I thought these were for. Like I said, we could all already buy Bitcoin, you know?
Yeah, I think that's right. Every indication I have of that audience is that demand from that space is accelerating already. We're seeing increasing wins from that space. I'm sure Alex is seeing increasing wins from that space. And as mentioned, we expect to, open up major new markets at the Morgan Stanley, Wells Fargo, Bank of America's, UBS of the world. And I would just click down on that $40 trillion number. We're seeing sort of 2.5% emerge as an average allocation. 2.5% of $40 trillion is $1 trillion, right? We've done 15 billion. It's nothing. I don't know what the flows will be in the second half of the year, but I expect that we'll see an acceleration as those account platforms come on, and as the inevitable tailwinds behind crypto right now, which are massive, push us to new all-time high prices as we move to the end of the year, which I think we will see. I will also add, I expect 2025 flows to exceed 2024 flows. And I think we're going to build flows.
Wow. That's cool.
Yeah, year after year for a number of years. There are two reasons for that. One is these wealth platforms coming on board and the institutional capital unlocking. And the other, again, to point back to data, gold ETFs are the closest analog to this Bitcoin ETF launch. They were enormously successful out of the gate. They were the most successful ETFs ever at the time. And year 2 flows exceeded year 1. Year 3 exceeded year 2.
Really?
Year 4 exceeded year 3, all the way up to year 7. When you open up new asset classes, it's a multi-year phenomenon. So I do think we'll see accelerating flows in 25 and beyond.
Matt, if you had to give an ending for what the Bitcoin ETFs are in terms of their overall like maturity, like if we're at the 9th inning, then they are as like mature. They've totally their wine has aged. They're good to go. Like what inning are we in?
Yeah, we're like maybe at the bottom of the first. Maybe ETFs are a slow burn business. I mean, I point back to those gold ETFs. They took 1 year off in year 8, and then they reaccelerated again. Their highest year was 2020, 16 years after they launched. Institutions need to buy trillions of dollars of crypto. Right now they own zero, and ETFs are going to be a primary vehicle. So I think, maybe it's the bottom of the first, and the home team's coming up.
If you enjoyed all of that, then you'll absolutely love the Bankless newsletter. Join over 300,000 fellow readers, all for free. Click below to sign up.